The New York Police Department is launching a massive project to secure New York's financial district, an effort similar to the so-called Ring of Steel that protects London streets.
So critics are concerned about privacy. That's been a frequent complaint. But city officials say safety must prevail in an area that is already a proven terror target. Rick Leventhal, live in the heart of Manhattan there, and he has the story for us. Hi, Rick.
Well, good afternoon, Liz and David. You know, much of this is about cameras, and there are already some 2,000 privately owned cameras in Lower Manhattan. We can show you a couple right now. Underneath that building, right near the front door, you can see a couple of poles hanging down. Well, there are some 2,000 cameras like those on buildings all around this area, and they'll be linked. Cameras like these will be linked with 1,000 more cameras that are being installed by the city. All of these cameras will be tied together and linked live to a 24/7 monitoring station, and there will be other security procedures as well that we'll tell you about in a minute. All of this because the police commissioner says that Lower Manhattan is one of the, if not the biggest terror targets in the world.
You have the World Financial Center. You have the Freedom Tower. You have 3 buildings that are going to be built on the World Trade Center site. You have the World Trade Center Memorial, New York Stock Exchange, American Stock Exchange. So clearly, it's an area that needs extra protection.
So because of this, the New York City Police Department says it will now harden the 1.7 square mile financial district into one of the most secure areas in the world, not just with 3,000 cameras, but with hundreds more police officers, pop-up barricades, at least 130 license plate readers that will automatically scan license plates and alert the police if there's a problem, a stolen vehicle, that sort of thing. They may have other technology, too, like facial recognition programs, but privacy advocates say that there's no evidence that the system is worth the cost and no guarantees that the city will actually protect the privacy of the people who are recorded on camera.
There's a world of difference between somebody seeing you on the street and the government capturing the image of you on the street and putting it in your file for all times.
Well, the ACLU has filed a Freedom of Information request to try and get more details on this program that it says the police department hasn't yet revealed. The program itself is going to cost at least $106 million to start up, $40 million of that being supplied by the federal government, the rest by presumably mostly taxpayers here in the city of New York. And then there's going to be additional costs every year, guys. So this is going to be a very expensive project, but one that the police department feels is necessary.
Rick, thanks very much. Great to see you, Rick. Thank you very much.
The new security measures are a reminder that Wall Street and our economic system are the top targets for terrorists who really want to hit America.
Yeah, it ain't for nothing they did what they did on 9/11. Our Fox panel is back to talk about what it all means. Now, Mike Norman, on the one hand, security, we were there on 9/11. We remember very much what it was like.
That's right.
But I just looked up on IMDb this new movie called Look about how much our lives are going to be controlled by these surveillance cameras. There's something a little Orwellian about it.
Orwellian, you know, but unfortunately, I think it's just a sad commentary of the type of world we live in right now. You know, the terrorists, for the terrorists, if at first you don't succeed, try again. Look, Wall Street represents to them America. It's the bastion of capitalism. It's a bastion of freedom. They feel that the fastest way to affect us is economically. Okay, they're going to probably try again. I think there's a fine balance here. I think anyone rational would tell you that you know, on the one hand, we need to have safety, we need to have security. On the other hand, is it an invasion of privacy? Hopefully we'll be able to walk that line.
Peter Schiff is with us. Peter, I personally am so torn by this because on the one hand, you'll be really thankful if one of those cameras was on when you got mugged on the street. But on the other hand, it is getting rather onerous when you think of all of the cameras and the privacy issue that people talk about. Where do you stand on this?
Well, you know, it's kind of rare, but I actually find myself agreeing with Mike Norman on this one.
Yeah!
But yeah,
It had to happen soon.
Yeah,
look,
right.
it's a time of good cheer. The holidays are approaching.
But as long as long as it's it's the city government putting cameras in city property, these isn't in private property. It's in the public domain, and the public knows that the cameras are there. I think it's unfortunate if we have to spend money on this, but if we have to, we have to. And if the public is going to have to pay higher taxes for this additional, safety, then maybe we have to do it. But I don't think this is the same type of invasion of privacy as we talked about last time, where the government is taking records from private companies and looking through conversations and going on fishing expeditions. I think if there's cameras out in the open and they're looking at what's going on in public facilities, I've got no problem with that.
You're on. What do you think?
It's unfortunate, though, that we have to do it.
You're on.
It's
Go
unfortunate.
ahead.
I think for the most part it's going to be a big waste. I don't think we're going to get the terrorists to change targets because of a few cameras. The terrorists will find a way around these cameras. No country has ever won a war with terrorism or anybody else on the defense, and as long as we rely on building walls around our country or building walls around Wall Street, we're destined to just be surprised one day at, unfortunately, another September 11th like scenario.
Nicole?
If these things really worked, if they were really effective, I would buy. I might buy the argument, but I think this is just a waste and indeed a violation of our privacy.
Nicole, it helped in London after the financial district bombings.
Right. Yeah. I mean, there's no doubt that it could help a little bit, but I agree with Yaron that there is a question of just how much this would stop terrorists if they're hell bent on attacking Wall Street. They will try to find a way. And the other question too, to me, is who's going to have access to all this footage? And, I would like to see some sort of limitations or know who's going to be able to see all this footage.
Who controls the cameras? All right, thanks to our panel. In the meantime, the closing bell is a little over an hour away.
And let's see, 133 is what the Dow Jones is at now. The NASDAQ is also up. It's a good day on Wall Street.
You can email us, Liz and Dave, at Fox Business. Oil. But in the meantime, another Fox Business alert.
More stress for the already stressed out mortgage industry.
Wall Street firms have been hit with subpoenas. 3 subpoenas for 3 firms as investigators look for information related to the selling of debt tied to high-risk mortgages. Our Conor McShane has been following this story. He joins us now with the very latest. You've been calling Bear Stearns, right. Merrill Lynch, Deutsche Bank. The 3 names have been subpoenaed for more information by the governor, the Attorney General.
The Attorney General of New York. There's no comment coming out of the firms. The Attorney General's office isn't returning calls today either, so the news conference about this won't come today. That's not to say it won't come some other day, but the details of it came in the Wall Street Journal this morning. I'm talking to lawyers about it. They say it's going to be a very lengthy legal process. I can actually run through some of that for us here with the Wall Street Journal saying that the subpoenas have been handed out. The firms involved, Merrill Lynch, Bear Stearns, Deutsche Bank. The questions Andy Cuomo's asking here, wants to get to the bottom of, include the following. How did these firms review the quality of the mortgages they repackaged and eventually resold? How was the mortgage debt pooled into other securities, these CDOs and SIVs we've been talking so much about? What's the relationship between the banks and the rating agencies, S&P, Moody's? What's the relationship between those guys been throughout this whole process? And again, it's all part of a wider investigation. Cuomo's been looking at mortgages for a while, already subpoenaed Fannie Mae and Freddie Mac surrounding a different case surrounding mortgages. And again, as Liz says, I've been calling around to just about everybody to try to get comments. But what we have here is a New York State Attorney General, just to kind of sum it up, a New York State Attorney General going after Wall Street again. The predecessor, Elliot Spitzer, as we've talked about, did the same in the analyst scandal a few years ago over conflicts of interest. This is a completely different situation involving mortgages and a new AG.
Conor McShane, thanks very much.
Okay.
So what's ahead for these Wall Street firms?
Joining us now to talk about this, a man who's got lots of experience with such cases, former SEC enforcement attorney Ron Geffner, who's now a partner with Sadis and Goldberg. Ron, first of all, be specific. What laws might have been broken?
Securities laws related to adequate disclosure, securities laws related to suitability.
Meaning what? When you say related to suitability, what does that mean?
Well, first you want to make sure if the concern is whether these investment banks did the proper analysis of the securities that they were packaging, is who are you selling these to? Is it suitable? In other words, if they're really high risk and you haven't properly disclosed it, are you selling it to widows and orphans on the street? That's one concept. Is it getting into the right hands or the right purchasers? And then second aspect, are those purchasers aware of all material risks?
Do you think Andrew Cuomo is onto something here, Ron? Do you think that he has a shot at some point being able to really point the finger at some of these brokerage names?
You know what? It seems, from what I've read, and it's really the only information that's out there right now in the marketplace, that the requests are very broad. And so when you have situations where people have lost significant sums of money, which has occurred here, if you spend enough time looking at something, you're probably going to come up with something. Now, whether that something is material or not, that's a whole other issue that I can't answer still at this stage.
Now, you mentioned intent. Were these people who were selling these instruments aware of all the implications? I mean, the best analyst in the world a year ago wasn't saying that all these things would spiral out of control with the mortgage-backed security. So on the face of it, isn't it obvious that nobody was aware of all the risks?
Well, on the face of it, I can't necessarily. It's a hard question to answer, and that's actually a great question. There's two things. I started focusing on the statement you made about intent. I'm not familiar enough with the law to tell you whether intention is required, because there's certain liability that you may be subject to if there's a material omission or intent, meaning they were reckless, they disregarded it, they didn't do enough digging, that the mortgages were flying so fast that time didn't allow for it, and they just packaged them and threw them out to the street. It was buyer beware.
Okay, I'm so glad you brought up the word reckless. I'm going to ask you to switch hats here and pretend that you're defending maybe Bear Stearns or Deutsche Bank or whoever has been targeted here. Is it enough to say we relied on the ratings agencies such as Moody's and S&P for this information? We went upon that, so it's really them you should be looking at, not us. Does that work?
You know what? You guys are a great team. You should be on TV together. These are great questions, I'm telling you.
High five, David.
No, you know what? The answer is it's not clear. How much can you rely upon another service provider in the marketplace? And are people that are coming to you because you're a Merrill, a Deutsche Bank, a Bear, or wherever you are, because they expect you to have done some form of diligence as well? I don't think you can necessarily slough it off. If I'm driving a school bus, do I not do my own maintenance check, or it's good enough that I took it to another garage? Will I not have liability? So I think you can't turn a blind eye either.
Understood. Ron Geffner, formerly of the SEC. Great to see you, Ron. Thanks very much.
Thanks,
Please come
Liz.
back.
Thanks, David.
Appreciate it.
We tried to question him. We
I
tried
think
to
you're
put
going to
him
keep
on
your
the
jobs.
At least for the day. Thanks, Ron.
Thank you.
See ya.
Take care.
Well, these latest subpoenas, are they meant to uncover real wrongdoing, or is this a new business witch hunt?
Our Fox panel is here to talk about it. We are joined by Mike Norman from the Economic Contrarian Update, Nicole Ridgway from SmartMoney.com, Joran Brook from the Ayn Rand Institute, and Peter Schiff, author of Crash Proof. All right, Peter, what do you think? Is there anything to this, and is it appropriate to be subpoenaing these companies at this point?
Yeah. Well, I mean, of course there's something to it, but it's very typical. You remember back in the dot-com bubble during the 1990s when Wall Street was, touting all these internet stocks, and it was obvious to people like me that these companies were worthless, yet, nothing happened until after the bubble burst, and then they paid some fines, they got slapped on the wrist, but ultimately Wall Street made a lot of money promoting those bogus companies. They did the same thing with these mortgages. When I first learned about these securitized mortgages a couple of years ago, and I saw the high credit ratings, I knew they were worthless. I knew it right away. I'm sure they knew the same thing. But, what's going to happen this time when Wall Street got a lot of people to buy the dot-coms? The customers did it with their own money. But this time, Wall Street is much more exposed because they lent people money. They lent their customers money. They financed these transactions. And many of these Wall Street firms, some of them might go bankrupt this time. They're going to have much bigger penalties imposed on them in the market than they are going to get from the government. But I'm sure there's going to be fines. They're going to plead guilty to certain things, and they're going to get slapped on the wrist. But they might have much bigger losses imposed to them in the market because they're on the hook for a lot of these products. Because even though they sold them, they vendor financed them, and it's going to bite them big time.
Explain what you mean by vendor financing quickly, if you can.
Well, it means a lot of the companies, a lot of the hedge funds that bought securitized bonds from the big brokerage firms did it with money that they borrowed from the big brokerage firms.
That's a key
and
point.
The only collateral for these loans are these subprime mortgages themselves that are now worthless.
All right, so it's kind of a pyramid scheme, Mike.
I agree with Peter Schiff.
Really? What?
I just had to throw that in.
Oh,
okay. You want to know something?
I had a heart attack for a second.
Listen to this. I worked for Standard & Poor's in 2000 and 2001. I was essentially fired in 2001 for challenging some of the assumptions on these CDOs when I went to the top analysts and I said, will these withstand a deep economic downturn? Okay, which we haven't even had. Okay, we haven't had a recession. They were like, no, these are stress tested. How could you even think of something like that? Look at what is happening now. I do agree with Peter in the sense that, look, this comes so late. I mean, the horses have left the barn already. Where were these guys? Where was Cuomo? Where was Spitzer prior to these things blowing up? If you really had a concern, if you thought there was excess being built into the marketplace, into the system, you should have been on top of it, scrutinizing it, not after everything comes unglued, and now you risk throwing gasoline on the fire, so to speak, and exacerbating the situation. I think it's terrible.
Nicole, could you say better late than never for Cuomo coming out after these people?
I think so. I mean, Mike might not agree with me, but
I would never disagree with you.
you know, I mean, they should have done their due diligence. They can't blame everything on the credit rating agencies. I do think that we might see subpoenas for the rating agencies too, Moody's and S&P. You know, I mean, look, they're looking for people, not necessarily scapegoats, but some accountability here.
You're on. I'm sorry to do this. You got 20 seconds, quickly.
This is pure political opportunism by Cuomo, by Bush, and by Clinton, taking advantage of a problem in the market to score political points. The market is penalizing these banks. As Peter said, they're going to suffer huge losses. You know, they made bad decisions. They were stupid. They financed it themselves. How corrupt could they have been if they were financing this stuff themselves?
All right. You did it in 20 seconds. Thanks so much.
Oh,
We'll have
right.
you back. The federal government.
This is a Fox Business Alert. Competing plans this afternoon. You could call them dueling plans, right?
It's a good way of putting it.
Although they're pretty similar. This to deal with the mortgage mess. One comes from Senator Hillary Clinton, the other from President Bush.
Now, both of these, of course, are aimed at stemming the growing tide of home foreclosures. Adam Shapiro has been looking into all the details, or at least those he can get his hands on, about both plans and joins us now with more. Hi, Adam.
Hi, David. And the important word here is freeze. It's not only freezing in much of the Northeast because of the snowstorm we're getting, but we're going to have some sort of freeze announced tomorrow for people who have subprime mortgages and who are current on their mortgages. They've been paying their mortgages, but they face a reset that they cannot afford. And the plan, as we understand it, will freeze their mortgage, their interest rate at least, for up to 5 years so that they can refinance, build some equity, and get out of the trouble they're in. Now, at 1:45 p.m. Thursday afternoon, there will be a press conference, an announcement by both Secretaries of Housing and Urban Development, Alfonso Jackson, as well as Secretary of the Treasury, Henry Paulson. They will be announcing the details of this plan. And already, Mr. Paulson has been briefing, to a degree, some members of Congress. Roy Blunt actually this morning addressed this issue and says this is going down the right track to help homeowners.
What the Secretary is trying to do is step in and find a cooperative solution where the private sector, the lenders, are a partner rather than being told what they have to do. And the long-term impact of that is much better for people that are going to get a loan 5 years from now or 10 years from now than going in and totally making it impossible for people to borrow money because nobody wants to loan it.
President Bush also expected to discuss this plan tomorrow afternoon. The plan apparently is in the works. It has been finalized, and at 1:45 p.m., the Secretaries of Housing and Urban Development, as well as the Secretary of the Treasury, will announce the details to us on Thursday. Back to you, David and Liz.
Adam, thank you. In the meantime, Senator Hillary Clinton at the NASDAQ today talking about the subprime situation.
She said there's a lot of blame to go around, including for the borrowers, but she saved the heavy artillery for other targets.
Responsibility belongs to mortgage lenders and brokers who irresponsibly lowered underwriting standards, pushed risky mortgages, and hid the details in the fine print. Responsibility belongs to the administration and to regulators who failed to provide adequate oversight and who failed to respond to the chorus of reports that millions of families were being taken advantage of.
Yoron Brook and Peter Schiff joining us right now with reaction to that. Yoron, what do you think? Is she going down the right path here or not at all?
No, I think this is an awful idea, and it's the same just true of the Bush plan.
Why?
Well, I mean, what you're doing is letting the borrowers off the hook, letting people who took on risk in an irresponsible way, and they should suffer the consequences. And Wall Street will suffer the consequences. It'll suffer the consequences of these foreclosures. Peter earlier mentioned the possibility of some of these banks going bankrupt. I hope they let them go bankrupt. Let the government let some of these banks go bankrupt. Let people who made really bad decisions, really bad mistakes, put money where they shouldn't have put money. Let them suffer the consequences. Let the market clean the mess up.
And, you know, Peter, the other thing, and I've mentioned this before, is that because of the fact that most subprimers are paying off their mortgages on time, doesn't this provide an incentive not to, because if you miss a couple of payments, maybe you'll be let off the hook for the next 3, 4, 5 years of an adjustable rate.
Well, of course, there's always a moral hazard. Whenever the government is giving away money, people rearrange their situation to achieve it. I mean, there's probably plenty of examples where somebody maybe took out a subprime mortgage and used the money to go buy a vacation house, which he owns free and clear. I mean, the whole thing is ridiculous, that the government should stay out of this process. You know, a lot of these teaser rates actually have negative amortization features. And if they freeze these rates, what's going to happen to these balances? People are going to have less equity in their homes in a few years, not more. And what good is freezing the mortgage payments? Let's say someone has a $300,000 or $400,000 mortgage on a house that's only worth $200,000. I mean, what good is freezing that? I mean, this mortgage is a liability, and who's going to take care of these properties? The borrowers aren't going to maintain them. They're going to depreciate even more. No one's going to fix the roofs or fix the plumbing when the house is worth hundreds of thousands less than their mortgage.
Indeed. Senator Clinton had some other points about the responsibility. And is it a soundbite, Lou? Is that a soundbite or a full screen? Okay. Basically, what she said was that the responsibility lies upon mortgage lenders and brokers who irresponsibly lowered underwriting standards, pushed risky mortgages, and hid the details in fine print. Yoram, do you just let the crooks in this industry go? She's saying no.
Well, if there are crooks out there, then we have laws against fraud. The police should get involved, and they should prosecute them and send them to jail for a long time. The ones that were just incompetent are going bankrupt. I wish they'd let Countrywide go bankrupt. I mean, the reason Countrywide is still around is because the government is lending it money through the Federal Home Bank and through, ultimately, deposit insurance, which allows Countrywide to offer me 5.5% on a money market account, which is guaranteed by taxpayers.
And Peter, you know, Countrywide's just the tip of the iceberg. Freddie and Fannie, who hold, what, about $4 trillion worth of mortgages and securities, what happens when they go down?
Oh, I know. I mean, that's a big thing. I do believe that they're going to fail without a bailout. And I don't even think they can be bailed out. But yeah, sure, there are the loan exceptions where people were taken advantage of by unscrupulous lenders, and in those cases, people should be able to use the court system. But you know, most of these subprime borrowers, they used none of their own money. They bought these houses without a penny.
That's it.
So what
Peter,
are they going to lose? They're not losing anything.
All right, Yoram and Peter Schiff, thanks very much. We will be right back with more Fox Business.
Now, these economic problems are certainly not all Wall Street's fault, not by a long shot. But the reality of our interconnected economy is that what happens on Wall Street impacts main streets across America. It happens sometimes within minutes, sometimes over the course of months or even years. If we're honest, we need to acknowledge that Wall Street has played a significant role in the current problems, and in particular in the housing crisis.
Now, a lot of what she talked about, she laid out a three-step plan to really tackle the foreclosure crisis, and those steps did include at least a 90-day moratorium on foreclosures, a freeze of the fluctuating rates on subprime loans for at least 5 years until at least they could be converted into fixed-rate affordable loans. And she also said the third part of this plan is restoring accountability by requiring that lenders provide status reports on the number of subprime mortgages moved from adjustable to fixed rate. She really urged that she feels that Wall Street was a big part of this problem. She says you can't necessarily blame Wall Street for all of the problem that we are seeing in the foreclosure crisis, but she says that they did shift the problem from one point to another. They said that she's also said that they may not have created it, but they're certainly a root of a lot of the problem. She urged you guys. She said the tone of her voice was that it is just time to take action here from Wall Street to Main Street. Wall Street is thriving at a time when middle America is really struggling, and her voice was just urging everyone out there that this is something that we all need to pay attention to, and that there certainly has to be some sort of closure to all of this. And she did mention Mayor Bloomberg and that he is addressing this with the right sort of leadership. He took steps this morning that she did acknowledge and said that he is doing the right thing. So she had a lot to say, hand, she is tackling this with middle-class tax cuts. This is part of her incentive that she is campaigning with right now. These are just some of the things she talked about in her statements today, but overall a very interesting and urgent speech that she delivered here at the NASDAQ market site. Liz and David?
Well, you captured it for us, Sandra. Thank you very much.
Thank you.
So Senator Hillary Clinton laying much of the blame on the industry, but she did add that borrowers do bear some responsibility as well.
True. Is she right to lay more of a burden at the foot of Wall Street, though? Let's see what our panel thinks about that. Let's go to Peter Schiff first. Who bears most of the blame here, Peter?
Yeah. Well, you know, Wall Street might have served the punch, but it's the Federal Reserve that spiked it in the first place. And if she's going to blame anybody for this mortgage crisis, blame the Fed. Blame the entity that dropped interest rates down to nothing, left them there for 2 years, and then raised them at a snail's pace.
Yeah, but you can't sue the Fed, and you can't create legislation about the Fed, can you?
Well, no, but you can stop the Fed from pursuing these ridiculous monetary policies that produce booms and busts in the first place.
They're politically immune to interference from politicians, Peter. They're supposed to be.
No, you don't. You don't let them continue to create money out of thin air. You don't let them keep buying government debt and issuing new currency and expanding the money supply indefinitely.
We can go back.
Go ahead, Mike.
We can go back, Peter, then to the era of the pre-Fed, like I said, the 19th century, when you had banking panics and busts all the time and thousands of people out of work, unemployment in the double digits, when banks went under regularly, when household wealth was wiped out. I think it's crazy. Plus, Peter, according to your prescription,
wait a minute, Peter,
according to your prescription, okay, one of the things you love to point out week after week after week is the high gold price reflecting the Fed's largesse. Do you know when the Fed started to ease aggressively, gold was at $250 an ounce? Why aren't you saying at that time there was a fear of disinflation? In fact, the Fed did say that. They pointed it out
Okay, let Peter respond.
in their speeches that they were afraid of that.
Go ahead, Peter.
No, if you look at how the U.S. economy fared under the gold standard before the Federal Reserve from the beginning of the Republic till 1913, the dollar was much sounder. Consumer prices fell for 130 years. We went through the Industrial Revolution. We really grew the economy with sound money. It's only since the Federal Reserve has been around and they've been printing money like crazy that the dollar's lost more than 95% of its value.
Peter, we're getting off the topic here. Nicole, I bet you can get us back on. Is Senator Clinton... Is President Bush right to go after Wall Street, if that is indeed what they end up doing in this case?
I think for the most part, that is a good target. I mean, there's also the fact that, yes, what Hillary said was, part of this is the borrower's fault as well. I mean, this is everywhere. There's no such thing as a free lunch, and there was a lot of easy money being thrown around. So, on every level, I think that there's some blame to be put, but Wall Street is a place to start.
Well, she may have said that both parties are responsible, but she does say, and I'm quoting here, finally, responsibility belongs to Wall Street, which not only enabled, but often encouraged reckless mortgage lending. So I guess the ultimate bearer of responsibility in her eyes are the lenders, right?
But it always is with populist politicians. I mean, who are they going to blame? They're going to blame the people with the money, and they're going to appeal to the masses, the large population that are suffering right now. The assumption's always going to be that Wall Street are the bad guy. But I agree with Peter. The blame here is squarely with the Fed. The blame here is with government policy that has encouraged home ownership for decades and encouraged lenders to provide loans to subprime, customers, to low-income families. There's been this interest in not letting people rent their homes, but in getting people into homes. Well, now we have millions of people in homes that shouldn't be there. We get the combination of government policy. The blame should be squarely on government, but they're going to deflect it. And who better for them to deflect it towards than Wall Street?
Yeah, I agree with your Honor on one point. I think that it's popular now. It's the populist thing to go after the Wall Street because they have money. However, look, the flip side of this, a lot of people own homes who would not have owned homes prior to this. They're not defaulting. They're very happy. And why is it wrong, Yaron, for people to own homes in America? There's nothing wrong.
I think it's great. I think it's great. They own home because of the market. Let the market work.
Okay.
All right, gang. The market works. Let's leave it on that. Now, we should have everybody keep talking because now the market is over 200. The Dow Jones Industrial's just about 204 points in the plus side. Long time. Let's toss all this over to our panel, starting with Tracy Burns, who's on the floor of the New York Stock Exchange. Hi, Trace.
Hey, Dave, how you doing? Well, we've had quite a day, right? We start the day off with, the ADP jobs number, which many people don't place a lot of weight on, but they're predicting a big job increase. And then, as we talked earlier, the productivity numbers were up. We had increase in mortgage apps. But then on the flip side, we get Moody's coming out saying MBIA still has exposure to housing. Then we recently get this news from Genentech that the stock was halted. So we had all this kind of conflicting stuff, yet we still end up 181 points. I think for sentiment, this was a good day.
Mike Norman, what do you think as we whip this around pretty quickly with the panel?
Well, you said maybe the news this morning was not supportive of a rate cut, but guess what, Liz? We got a rate cut yesterday out of the Bank of Canada. We might get one tomorrow out of the Bank of England. So it seems like now around the world is so-called reflation trade going on. It's positive for the market.
Yeah, I think that we'll probably still see a rate cut. This was positive news, but not so positive that people are like, we're not going to get a rate cut. I think it's going to be a smaller one, maybe 25 basis points.
Peter, it was dollar positive, that's for sure. The dollar moved to about a 1-month high against the euro.
Well, don't get used to it. We just did the report on the subprime loans. One of the big problems with those loans is that people overpaid for their houses in the first place. People buying stocks now are going to be overpaying, and they're not going to be very happy. I mean, people have to understand we're in a bear market. Bear markets have rallies. Sell into them. And then sell your dollars.
Well, you got a 14 PE, 14, 15 PE on the S&P 500. Historically, that is no way an overvalued market.
A lot of those earnings, Mike.
In 2000,
hold on, Peter, let Mike finish.
Hold
on, Mike, go ahead.
I said in 2000 the market was overvalued and clearly was vulnerable for a very big sell-off. I mean, there's no competing asset to stocks right now which show a better value. I don't see how you could say the market is overvalued.
Look around the world. There's plenty of them. But remember, those earnings are coming from financial services, and those earnings are going to evaporate. Those earnings aren't going to pan out. You got to look forward. Yes, they are.
The biggest contribution to GDP in the third quarter was exports, my friend. It wasn't coming from financial. It was also business investment and spending.
We have a huge trade deficit.
Everybody,
they were getting along so well. I thought we'd change the pattern here.
Closing bell is just minutes away.
Nicole,
Stay
thanks.
tuned.